Hi everyone, this is Victor here. As you may already know, Sea Limited stock has dropped as much as 65% from the most recent peak. This large drop has erased all of Sea's gains since August 2020. If you bought Sea stock in August 2020, the stock is now back to the same level. There are several reasons for this large drop. First, India recently announced that Sea's self-developed game Free Fire is banned in India. I will talk more about this later on. Second, Sea's Free Fire game's quarterly active users and quarterly paying users seem to have slowed down a lot in the most recent quarter. And third, US Fed is expected to increase its interest rate known as the Fed funds rate much faster than anticipated. Growth stocks valuations are always very sensitive to interest rate changes. Sea's future earnings are worth much less now because of higher interest rates and higher US Treasury yields going forward. You may wonder, is Sea Limited stock a value trap now, or is it undervalued? I will answer these two questions in this video by covering these topics. First, Sea Limited's 3 major headwinds you must know. You will learn about Sea's 3 biggest risks going forward. Second, is Sea Limited stock a value trap? Third, Sea Limited stock valuation. I will use the sum of the parts valuation model to value Sea's fair intrinsic value. And fourth, will I buy Sea Limited stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent, hire other outstanding analysts to cover different stocks, and create many excellent stock analysis and investing videos every week that will help you become a great investor. The link is in the video description. Take a look, let's start. The first major headwind is that Sea's most important self-developed game, Free Fire, is currently banned in India. According to this article here, India has recently banned 54 Chinese apps including Free Fire because of national security and privacy concerns. India is concerned that Chinese apps are tracking users in India and that these Chinese apps can transfer user data back to China. This is from Bloomberg. The game Free Fire was the highest grossing mobile game in India in the third quarter of 2021, according to industry tracker App Annie. While a surprise, the ban shouldn't impact the company heavily given the Asian country accounted for just under 3% of Sea's overall mobile gaming net sales in 2021, Bloomberg Intelligence wrote citing Sensor Tower estimates. According to App Annie Q3 2021, Free Fire was the second highest by average monthly active users (MAUs) for mobile games on Google Play globally. Highest grossing mobile game in Southeast Asia and Latin America, maintaining this leading position for 9 consecutive quarters. Highest grossing mobile game in India, maintaining this leading position for 4 consecutive quarters. And highest grossing mobile battle royale game for 3 consecutive quarters. And the second highest grossing mobile game on Google Play in the US. If the Bloomberg article is correct, India banning the Free Fire game should not have a huge impact on Sea's digital entertainment business because India only contributed less than 3% of Sea's gaming revenue in 2021. Here is another important part about Free Fire's ban in India. At the time of making this video, most users can still play Free Fire in India because India is only banning the basic version of Free Fire that has lower graphics, which is more suitable for lower-end smartphones. Free Fire Max is still available in India. Free Fire Max is the newer version of Free Fire with much improved graphics. This means players can move to Free Fire Max if they have high-end smartphones that can run the game. Based on what I know, many Android users use lower-end smartphones in India because these lower-end smartphones are much cheaper and more affordable in India. And these lower-end smartphones may not be able to run Free Fire Max. However, Android users can still download the APK files of Free Fire from third-party websites. Of course, India can still ban Free Fire Max in the future because of national security concerns. I cannot predict whether this will happen. Since India is banning Free Fire, many investors are concerned that Sea's e-commerce business, Shopee, will also be banned in India because of India's data security and national security concerns. Again, I cannot predict whether India will ban Shopee. According to management, Sea's Shopee e-commerce business only launched in Poland, France, Spain, and India in recent months in 2021. Sea is still testing water in new markets such as India. This means Shopee in India is not a large revenue contributor to Sea yet. If India does ban Shopee, it should not have a large impact on Sea's e-commerce business. The second major headwind is that Sea is still earning all of its operating income and positive cash flow from its digital entertainment Garena business, specifically from one self-developed game, Free Fire. Sea has three major businesses: digital entertainment, Garena gaming business, e-commerce Shopee business, and digital financial services, Sea Money fintech business. Sea's digital entertainment Garena business is the only business that has positive operating income, positive EBITDA, and positive cash flow. At the time of making this video, Sea's Q4 earnings are not out yet, but if you look at this here, you can see Sea's digital entertainment business had positive EBITDA, while Sea's e-commerce and digital financial services had large negative EBITDA in Q3 2021. Also, if you look at this table here, you can see Sea's digital entertainment's positive operating income was not enough to offset the large operating losses from Sea's e-commerce and digital financial services. So what does this mean to shareholders? It means Sea is using the positive earnings and cash flows from its digital entertainment gaming business to fund the growth of its e-commerce Shopee and its fintech Sea Money businesses. To be fair, Shopee and Sea Money are still in the very early growth stage that require a lot of capital investments upfront. Their revenue growth rates are much higher than Sea's digital entertainment's revenue growth rate. However, Shopee and Sea Money are still losing a lot of money and burning a lot of cash every quarter. It will likely take many years before Shopee and Sea Money become profitable businesses. Shopee is using a loose leadership strategy, selling most products at a loss to gain more market shares in Southeast Asia, Latin America, India, and now Europe. This is why Sea had an adjusted EBITDA loss per order of 41 cents in the most recent Q3 quarter. This means in the short term, Sea will still use its digital entertainment business to fund the growth of Shopee and Sea Money businesses. Personally, I believe Sea's biggest risk is that its digital entertainment's revenue growth and operating income are largely dependent on one self-developed game, Free Fire. This is from the most recent annual report explaining the risk of relying on one self-developed game, Free Fire. Although our other businesses are growing and may increasingly contribute to our total revenue in the future, we expect that our digital entertainment business will continue to contribute significantly to our revenue and gross profit. Among our online games, we substantially depend on a small number of popular games, including our first fully self-developed game, Free Fire, a global popular battle royale type of mobile game, which was launched in December 2017. In 2020, our top 5 games, comprising Free Fire and games licensed to us by third-party game developers, contributed 95.6% of our digital entertainment revenue, among which Free Fire contributed a significant portion. If you are unable to identify, source, develop, and launch new games titles that gain widespread popularity and generate significant revenue, our revenue and revenue growth may continue to depend on the success of just a few game titles. If there are any negative developments or occurrences to any of our key revenue earning games, such as decline in popularity, content quality issues, competing products, content restrictions, regulatory or legal change that affect our ability to monetize our games, reductions in consumer spending and engagement levels, delay or failure in producing new engaging content, or real or perceived security risk, our revenues could experience material decline or slower growth. As the gross margin of self-developed game content tends to be higher than that of content licensed from third parties, any fluctuations in the mix of our revenue generated from self-developed game content and licensed game content may also affect our profitability. Sea's Free Fire Battle Royale game competes directly with other very popular Battle Royale games, including Fortnite, Apex Legends, PlayerUnknown's Battleground, PUBG Mobile, and Call of Duty Warzone. If Free Fire is no longer a popular Battle Royale game, Sea will need to develop other games in-house which may not be as popular as Free Fire. Another option is that Sea can publish more third-party games from other developers or publish more games for Tencent Holdings, but Sea will earn much lower gross margins from these third-party games. As of now, Free Fire is still one of the most popular mobile battle royale games in North America, Southeast Asia, and Latin America. At the time of making this video, Sea's Q4 earnings are not out yet. If you look at the Q3 earnings here, you can see digital entertainment's quarterly active users and quarterly paying users only grew slightly compared with the previous quarter. This suggests Free Fire's active users are no longer growing as fast as before. I believe the pandemic that started in 2020 has accelerated Free Fire's active users growth in recent quarters. During the peak of the pandemic, most people in Southeast Asia were forced to stay at home, and many people play mobile games a lot more than before. Going forward, I believe Free Fire's active users growth will likely slow down a lot because of the pull forward effect from the pandemic, and because Sea already has a very large user base of 729 million active users. The third major headwind is upcoming interest rate hikes that will likely impact C stock valuation going forward. This is outside of C's control. As of now, the US CPI inflation rate is at 7.5%. This is the highest inflation rate in the past 40 years. The US PCE inflation rate is at 5.8%. This is much higher than the US Fed's average 2% target inflation rate over time. The US Fed is expected to raise interest rates as many as 6 to 7 times throughout 2022. The US Fed is also expected to reduce its $8.9 trillion balance sheet in order to reduce the high inflation rate in the US. If the US inflation rate does not ease by the end of the year, the US Fed will increase its interest rates much faster and reduce its $8.9 trillion balance sheet faster than anticipated. Increasing the US Fed funds rates and reducing US Fed's $8.9 trillion balance sheet will lead to high borrowing costs for both consumers and businesses. Growth stocks, including C Limited, have dropped a lot in recent months because they are always impacted the most when interest rates are expected to increase and when the US Fed is tightening its monetary policies. You may wonder, how will the US Fed's monetary policy tightening affect C going forward? C is not a profitable company yet. Its e-commerce business and digital financial services are still losing a lot of money every quarter. Since C does not have consistent free cash flows yet, the company will need to issue more shares and issue more debt, such as convertible notes, to finance its growth going forward. For example, if you look at C's balance sheet here, you can see C had $3.5 billion of convertible notes in Q3 2021. These notes can be converted to more C shares if certain criteria are met. When US Fed is expected to increase its Fed funds rate much faster and reduce its balance sheet to fight inflation, it will increase the borrowing cost for C. When interest rates are expected to increase, the discount rate to value C stock will also increase. This means C's future earnings will be worth much less now. This is one of the main reasons C stock has dropped as much as 65% from the most recent peak. So is C Limited a value trap stock or is it undervalued now? In my opinion, I believe C is not a value trap because its total revenue, especially its e-commerce revenue, is still growing quickly. I will consider C Limited a value trap if C's total revenue and its e-commerce revenue growth slow down significantly. According to the latest Q3 earnings, management has raised e-commerce revenue guidance for the second time for the full year of 2021. C's e-commerce GAAP revenue is expected to be between $5 billion and $5.2 billion for the full year of 2021, representing 135.3% year-over-year growth from 2020. In comparison, management gave a lower bookings guidance for C's digital entertainment business. We expect bookings for digital entertainment to be between $4.5 billion and $4.7 billion, representing 44.4% growth from 2020 at the midpoint of the revised guidance. This shows C's e-commerce business is expected to grow at a much faster rate than C's digital entertainment business. We can expect C's e-commerce business to be the biggest revenue driver going forward, compared with C's digital entertainment gaming business. Shopee is the largest e-commerce company in Southeast Asia. Shopee also has a strong presence in Taiwan and Brazil. Management said this about Shopee's e-commerce growth strategies in new markets outside of Southeast Asia. In the recent months, we launched Shopee in Poland, France, Spain, and India. From time to time, we may test the waters in new markets where we believe there may be an opportunity to use our experience in highly diverse environment to reach underserved buyers and sellers. On one hand, our core focus remains managing our efficient and sustainable growth in Southeast Asia, Taiwan, and Brazil, where we have established and are continuing to grow our strong presence, driving local sellers and buyers. On the other hand, there are opportunities we can address through efficiently leveraging the Shopee platform in existing markets and expanding into new markets have increased. At the time of making this video, C's digital entertainment business already has a very large user base of 729 million active users. I believe C's digital entertainment business growth will likely slow down a lot going forward, unless C releases more self-developed games instead of relying on one self-developed game, Free Fire. Management said this explaining how the company will expand Free Fire in new markets that are not deeply penetrated yet. So going forward, we're looking to sustain our existing strong user base in the existing markets and explore new growth opportunities in markets that we haven't deeply penetrated, especially with the launch of Free Fire Max and new features including tools for user-generated content such as Craftland and other tools and features we might introduce to the game in the future. Here's another important development. Recently, in C's annual general meeting, C shareholders passed a special resolution to increase each Class B ordinary shares voting power from 3 votes to 15 votes. Tencent Holdings is C's largest shareholder. Under this special resolution, Tencent will convert all its Class B shares to Class A shares. This means all outstanding Class B shares are now beneficially owned by C's founder and CEO, Forrest Li. firstly now controls approximately 57% of the total voting power, up from the previous 54% total voting power. Tencent's total voting power is now decreased to less than 10%. Tencent's ownership in Sea is now reduced from 21.3% to 18.7%. This means firstly already has the majority control over Sea, even if Tencent is still the largest shareholder. Let's talk about Sea stock valuation, so we will know whether Sea stock is still substantially overvalued, fairly valued, or undervalued. We cannot use a discounted cash flow DCF model to value Sea's fair interest value because Sea does not have consistent cash flows yet. This means we have to use a comparable valuation model to value Sea's fair interest value. In my previous Sea Limited stock analysis video, I used a different comparable price to sales valuation model using Grab Holdings, Alibaba, and Mercado Libre as comparable companies because these companies have similar e-commerce and fintech businesses that compete with Sea. My fair valuation for Sea is much higher in this valuation model because these companies' price to sales multiples were much higher before the current large market correction. Alibaba, Grab Holdings, and Mercado Libre's current price to sales PS ratios are much lower now because of the current large market correction. This means Sea's fair value is also much lower now. Several members suggested that I should use the sum of the parts valuation model for companies that have different businesses. Here, I will use the sum of the parts valuation model to value Sea's fair interest value because Sea has 3 different businesses. These 3 businesses are digital entertainment gaming business, e-commerce Shopee business, and digital financial services Sea Money business. Under Sea's digital entertainment gaming business, I'm using its trailing 12 months of revenue here because management has not given updated revenue guidance yet. The trailing 12 months of revenue is 3.6 billion. The 2 comparable game publishing companies are NetEase and Tencent Holdings of China. I am using their 5-year average price to sales PS ratios here. The average price to sales ratio is 7.87. If we multiply digital entertainment's 3.6 billion total revenue here by the average price to sales ratio of 7.87, digital entertainment's fair value should be around 28.32 billion. Under Sea's e-commerce business, management gave the revenue guidance between 5 billion and 5.2 billion for the full year of 2021. So I'm using its expected 5 billion total revenue here. The 2 comparable e-commerce companies are Mercado Libre and Alibaba because these 2 companies compete with Sea in e-commerce. Their average price to sales ratio is 11.94. If we multiply e-commerce expected 5 billion total revenue here by the average price to sales ratio of 11.94, Sea's e-commerce business fair value should be around 59.7 billion. Under Sea's digital financial services business, I'm using its trailing 12 months of revenue here because management has not given revenue guidance for this business yet. The trailing 12 months of revenue is 0.3 billion. The 2 comparable fintech companies are PayPal and Grab Holdings. The average price to sales ratio is 18.32. If we multiply digital financial services 0.3 billion total revenue here by the average price to sales ratio of 18.32, digital financial services fair value should be around 5.43 billion. At the time of making this video, Sea has 11.8 billion of cash equivalents and around 7.5 billion of short-term and long-term debts. The net debt is minus 4.4 billion. If we add these 3 business fair values here with Sea's cash equivalents here, and then subtract Sea's short-term and long-term debts here, Sea's fair interest value should be around 97.82 billion for the entire company, and its fair interest value should be around $175 per share. This means Sea Limited stock is likely undervalued at the time of making this video. In comparison, Morningstar gave a much higher fair valuation of $226 per share. So will I buy Sea Limited stock? I already have Sea Limited stock in my gold stock portfolio here. I started buying it in 2020. It's currently down around 22%. I'm not planning to buy more Sea Limited stock because I want to keep a very small portfolio allocation in Sea to reduce risk. At the time of making this video, I have about 1.4% of my main gold stock portfolio that's invested in Sea. I plan to invest in Sea for at least 10 years, so I'm not too worried about it. Based on my estimates, I believe Sea's fair interest value should be around 97.82 billion for the entire company and $175 per share. I will update Sea's fair interest value every quarter once the company releases its latest earnings. If you want the latest interest value estimates for Sea, you can download the interest value calculator in my Patreon blog in the video description. Now, all these estimates are only my opinions and my analysis based on my research. They are not financial advice. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.